Hello and welcome to Statecraft IAS Academy. This is Nandini, and today we are going to explicitly discuss about those topics which are the most expected and most probable ones in the Prelims 2026. I totally understand that we are, say, near to 50 days away to our examination, which is why the anxiety must be too high at this point of time. Therefore, have faith in me and be rest assured that whatever I cover in this lecture, it is going to bring out the most of the examination perspective, including your static as well as current part, because that is what I respect about you all at this point of time, that if you're watching this video, none of your second gets wasted. So without any further ado, let's quickly get started and see what we have got in this entire session. At this point of time, I'm assuming that most of y'all would have completed your static part, which is why I am going to straight up jump to the sections that are important for the examination. Nevertheless, if you are at any point of time finding it difficult to say comprehend to anything or understand anything, you may as well write back to us and we shall get in touch with you. So let's get started. And the rules of this class is pretty simple, that you all don't have to write anything, because I believe that whenever we write and listen, our attention gets divided and then we lose out on most of the stuff. And I don't want you all to suffer from it. Therefore, have faith in me. Just listen to me with utmost sincerity and be rest assured that we are going to retain 75 to 80% of the class in this lecture itself, because of the fact that, of course, we are not robots, and 100% retention is something I cannot promise. That would be like a hoax to you. Therefore, yeah, let's get started. So in this particular session, we are going to also understand the UPSC traps other than the expected question, as to how UPSC traps the aspirants in terms of say using certain terms that might be confusing, which result in negative marking. We are also going to discuss about the definitions per se, and these are the list of topics that we are going to basically cover out of it. Now, since these are, say, a wide range of topics, we are going to divide this video, like this particular initiative, into three parts, and we are going to release three parts video, because making a very huge video out of one say academic perspective would be a little bit consuming and also tiring, and I don't want you all to have that. We are humans, we have limited attention span, and I'm going to respect it. So I would request you all to stay tuned to this series so that we can say religiously follow it and have most of the answers in our prelims answered by the things that we are basically practicing at the 11th. So let's quickly get started. The very first topic that we are going to talk about is RBI surplus transfer. Whenever we talk about RBI surplus transfer, we need to understand that this is the, say, residue amount which is left with the RBI. RBI per se is not an entity. RBI is rather not a company, which is why we do not mention this surplus as profit. However, at most of the places you will find that people do interchangeably use the term, but the correct term would be surplus. We know RBI makes money via, say, printing currency. RBI makes money via investing in government securities, foreign securities, and whatnot. But at the same time, we must also understand that RBI is the central entity which is responsible basically for the transactions that are to happen with the center government as well. And when at the end of the financial year, all the transactions are, say, calculated, and then every balance sheet is balanced, all of those things are done, then precisely we see that there is a certain amount that is left with us, and that is what we call as surplus. This surplus is transferred as dividend to the government so that government can deal with the deficits whichever it is facing at that point of time. However, it is not such a good practice that we should solely rely on it, but again, it is something that conventionally the government has been doing. So that is one point that I told you about. Now, why it is essential for us to decode this particular thing is because 2.69 lakh crore, which is the highest till now, is the surplus which is transferred to the government. That is why it was in news, and hence it becomes important with respect to the static part of us. All right. All of this, if you'll see, is calculated using the economic capital framework, which, mind you, was introduced so that RBI also has some buffer with it, so that during the time of emergency it can manage all of it and like not fall in the hands of say a situation which is very problematic to the RBI itself, because RBI is a central agency, it is the central bank over which all of the functionalities depend, which is why it is essential that we must also take care of it. Correct. Post this, if we follow as to what all are the core concepts related to it, and that's how we are going to like maintain all of the topics, we see that it is the RBI surplus that is precisely something that can be asked. It is your seniorage, it is your surplus transfer, the RBI section, all of which could easily be asked and comfortably be answered if at all they are asked. Here, UPSC traps us by actually confusing us within terms like, is surplus the tax revenue? No, it's not. Surplus is simply the amount which stays with RBI post all the transactions are. The economic capital framework, is it a monetary policy tool? No, it's not. Monetary policy tools are repo rate, open market operations, all of those things which we basically cover within the aspect of quantitative and qualitative tools, and that is what it matters. ECF is nonetheless mentioned in both of the lists, which is why it is not a monetary policy tool, although it looks like it, because it pertains to actually also cover the deficits and help the government as such. But again, we need to be very, say, crystal clear about it that it's not a monetary. Now, the revaluation gains, are they the actual income? No, it is the gains that the RBI has made after lending, selling, and doing all of the operations which it pertains to do. And then the confusion between dividend, surplus, and seniorage. Seniorage is basically the profit which is earned of printing money. Surplus is the money which is left with us. Dividend is the profit aspect which pertains to arise in those transactions where the companies are. Now, how can UPSC specifically frame a question out of it? You'll see that there could be a statement based question as to RBI surplus is determined by MPC. It's completely wrong. It can, it would be right to say that it is rather transferred under the RBI Act. There could also be concept based question wherein it could ask what actually determines the surplus, other than which we can see match type question as well, which may arise. So that's how basically the entire bit of it could be asked in the examination hall, and that is something that you need to take care of, that yes, there are confusion bits as well, but I'm not going to fall into the trap. Okay. Post which is, if you see, I have also given a quick revision slide for all of you so that you all don't have to turn the pages of the slide again and again when you refer to the PDF. This is something which would be well enough and sufficient for all of you to actually tackle the examinations and the questions whatever are asked. Moving on to the next question, we have the next question on monetary policy tool. Now, this in itself is a very important static related topic, which I would want you all to actually have hands-on comfort on this. And this was in news because RBI is actively adjusting repo rate to control inflation. Now, related to this, the very thing that I would want you all to know is with respect to repo and repo rate. Now, repo rate is basically the interest rate which the RBI charges to the banks, while repo in itself is a separate concept, actually speaking about what? Actually speaking about the repurchase bit, wherein it enters into a contract or an agreement where a promise is made pertaining to say that we are going to repurchase of whatever is sold in the short span which is promised by and between the two entities, right? And on that note, something that you all should know is that open market operation is also a type of repo, not repo rate. It's a type of repo because there also the promise is made in order to conduct the transaction as and whenever the entities deem it important or necessity, however it is. So that is something that you all should know. With that respect, the things that are important herein are your standing deposit facility and your variable rate repo rate, right? All of these things are something over which the question could be asked. Rest monetary policy tool anyway are important, right? So in that aspect, you can actually see the trap areas which might arise, which is the confusion between repo versus reverse repo rate, because this mostly is confused with bank rate as well. Therefore, have utmost clarity over it because this is a lending my bad, this is like the bank rate is rather a lending rate and this is just a repurchase order agreement or contract. That is what it matters here. Then again, tools are something which non-negotiably you all must know. So practice onto that. And if we are going to see how the question would be asked, then there could be match the following types of question on the basis of rates. There could be what SDF is. So SDF is primarily to absorb liquidity. There could be statement based question, conceptual questions, much like whatever we have discussed in the previous slides, right? So on that note, here's a quick revision point of view that you all can consider for reference and we would be done with. Then comes the aspect of standing deposit facility, which RBI has made certain changes as to RBI actually introduced SDF as the floor of LAF corridor, wherein it has replaced reverse repo. Now, the problem with reverse repo is that this is something that does not stand true for the whole year. It comes in with an announcement which primarily the RBI makes as and when they have surplus amount and they need to manage liquid, wherein SDF is something that is available to us throughout the year and hence it is something which is preferred over reverse repo, right? It is of course a part of RBI's evolving monetary toolkit and therefore we must be knowing whatever the advancements are with this respect. Like we have also been talking about the liquidity adjustment corridor which has narrowed down due to this and that is something that would be the key takeaway from this. Herein, the core concept would definitely be about SDF, again about the monetary policy tool. Therefore, that is something that you should cover. And the trap could be with respect to how SDF and reverse repo are major chunk of the time misunderstood by interchangeably using, right? With respect to collateral also, the difference can be made and we must also know the difference between SDF and MSF just so we do not say fall in trap of our examination. That's how the examiner is going to ask you questions. There could be of course many much aspects related to it as well, but most of it is something that I have covered. Then comes the aspect of variable rate reverse repo, wherein the RBI has most recently injected 25,101 crore via VRR auction. Now, thing with VRR is that herein, whenever the liquidity in the market is more, whenever the say money supply increases, that is when what happens is the RBI or the central bank actually pushes for an auction and whoever is like asking for the least of the interest rate, that person is that bank entities basically taken into consideration for the very purpose of having the reverse repo lending and doing all of those market operations, due to which the money supply would be brought under control. So that's what happens herein, because we see that there are a lot of rates that are present in the market, and out of that the central bank actually gets to choose. That is why this particular condition is known as variable rate reverse repo. And if we see, then post COVID, the use case or the utility of this particular operation has increased over the time, and we have been seeing that it has got recent announcements and recent liquidity updates as well. VRR or VRRR is a monetary policy tool where RBI actually absorbs liquidity from banks at a variable interest rate, and it works by auctioning, by depositing with the RBI, and since the interest rate is not fixed, all of those things work hand in hand. The trap areas could again be with respect to VRRR and reverse repo, since they are by and large similar things. Just the aspect of auction is introduced herein, and the variable rates is introduced herein. That is the basic difference that exists, and that should be known by all of you. That is how the UPSC is going to ask you questions, and these are the quick revision points that you all can refer as well. Then comes the aspect of RBI increasing gold reserves. Now, when we talk about RBI increasing gold reserves, that largely came as a reaction. Reaction to what? It largely came as a reaction to the tariffs that US has over time placed onto us. Due to which, what the government of India did, government of India actually started to sell off whatever, say, foreign securities we had with respect to United States of America. Now, gold reserves, if we see, is an integral aspect of our forex reserve as well, which is why at this point of time we say that our forex reserve is actually doing well. The requirement is of 12 months of import reserve, and at the present moment I think we are doing well with 11th month of import reserve. However, there are certain issues that align with it, which we are going to discuss after, but this is basically the, say, introduction of the entire aspect that exists. We see that the RBI has increased their share from 7 to 15% in recent years, and it has also repatriated gold amidst the geopolitical tensions. At the same time, if we see that due to the geopolitical tensions, the nations are also feeling extremely vulnerable, which is why we see that the market of gold is very vulnerable and active, and also the gold prices are increasing every now and then. However, there is a fall sometimes as well. But largely, we see that gold is something that is actually having or facing a lot of gains, which is why this is a right thing to do as of now. And central banks also, due to de-dollarization and geopolitical risks, are investing into it, just so at the desperate times we do not fall out of money in hand or cash. With this respect, the core concepts that are responsible to understand this particular topic are with respect to gold reserves, forex reserves, and how we actually hold our reserves with respect to gold, forex, foreign currency, all of that sort. So, on that note, all of this is something that you all should know, because again, geopolitics is something that largely affects us. And speaking of which, if we talk about the time that we are facing as of now, it is something that we must also take care of. The traps that we are going to fall off with respect to this topic is with respect to gold not being highly liquid, which is absolutely wrong. As gold is something that we might use at the desperate times, and it is something that can be converted into cash as well and can be used as a security. That is why these traps are something that you all must be well aware of. Try to actually align the economy with your purview, and you will understand that it is nothing but something which is related to our day-to-day life, and that's how it becomes easy, right? Next topic that exists out of it is forex reserve composition, because that has also changed over the duration of time. We see that the forex reserves are largely changing because there is an increase in gold reserve share. You will also see that the currency is volatile, and we are also expecting, like, a lot many analysts have been certain about the fact that it is high chances that we might see our Indian rupee against dollar at 97 or 98 INR, right? So that's, if we like consider that particular aspect out of it, then it is a problematic feature as of now. Again, by and large, if we see, our reserves are there out there to protect us, but then if we consider the current affair of recent times, the reserve that we have has fallen close to 500 billion US dollars. What is the problem with it is that it is near to the BOP crisis that we have in 2013, which is a cause of concern. Now, over and above, if we say go by the books, then there is nothing to be very, say, tensed about. But when we actually make calculations, then we come to the point and realize that no, there exist certain issues with the forex reserve as well, which the government should look up to. The core concepts again related to it is with respect to your forex reserve, wherein the trap areas could well understood with the fact of SDR, which is your standing deposit ratio, which is again not a currency. It is something that is available to you for the desperate times, of course, throughout the year. Then your RTP is not loan, gold is not highly liquid, and forex reserve means only dollars. All of this is something that must be worked up with, well exercised with, so that you all know that these are the basically UPSC will catch you in. Next up, we have Ombudsman scheme expansion. Now, over the time, this particular scheme has gained a lot of changes, a lot of amendments, starting up from which there were many ombudsmen previously, there were many grants redressal officers, which after a lot of discussion was made that okay, there would be only one regardless, and they have expanded on this scheme only, wherein the state center and rural cooperative banks are also, apart from SCBs and NBFCs, are brought under the ambit of it, and that is something which pertains to bring this particular into limelight. It is largely to strengthen the consumer grievance redressal, because previously it was seen that there were so many filters that actually reaching up to the redressal mechanism was something which was extremely difficult, and that's why, to cope with all of those problems and to improve the trust that the people would have in the banking system, this particular scheme was expanded over time. Now, herein, what all could be asked is about the ombudsman, about the mechanism that it follows, what all are the entities that are involved in it, and if the entity does not resolve it, if the bank does not resolve it, how can you reach out to the person? Because there is a whole lot of a process. Previously, it was that you can reach out to the ombudsman at any point of time, but now, if the bank is unable to address your issue, then within the time duration or the window of 30 to, my bad, 90 days, you all can reach out the ombudsman, post which even the ombudsman would not be liable to help you, because that is a complaint filing window which must be taken care of, so that all of the incidents that takes place are held carefully. The trap areas could be ombudsman being equated to the court, which it's not. It's just an entity that is out there for grievance redressal. It's not a part of judiciary, it's quasi judicial, and it's often misunderstood, because internal ombudsman and RBI ombudsman are like different, and they are also regulated differently. And also, not all the banks are covered, since housing finances, housing capital finances, or the banks related to such entities, there are separate bodies which basically look after it. Next up, we have ways and means advances. Ways and means advances again are periodically revised via the center and the state, and it basically is about loaning while there is a cash flow mismatch, and of course, this is also for a short duration of time, mostly 90 days, which is 3 months, right? And this is actively used via the government when there are temporary liquidity shortages. The concepts that herein can be asked is, what is WME, what is its purpose, who all are involved, and what is the time duration that is related to it, and the involvement of the people is via what, as to are they only a give agency or a give and take agency in that sense. So that's how you all can also like read about it. And then we have about CBDC. Now the aspect of CBDC came into being because there was a e-rupee pilot project which was introduced via this, because it was understood that over the time it is becoming extremely difficult for people to carry a lot of cash, do transactions, and it is relatively or furthermore very easy to actually engage with it online, so that all of it also comes under the say purview of the delegated agencies, and everything happens in a fair and square manner. So in that sense, if you see, then we have the news of that RBI expanded digital rupee pilot, which was in terms of retail and wholesale value, and they launched this via the CBDC sandbox for fintech innovation, because our country is doing extremely great with respect to fintech, and it is seen as an alternative to cash and private cryptocurrency, because of which we are say engaging with the promotion of CBDC and the digital currency as such. If we understand the aspect of CBDC herein, then CBDC is basically a central bank digital currency, wherein the currency that is being used is online, and it is a fiat currency which is issued by the RBI, which is to say that it is backed by your administration and not gold and silver reserve. Hence, it has the value same as that of your physical notes, and that is something that we are promoting as of now, since it's a legal tender and it is issued by the central bank. It resolves a lot of problems that are related to it. Most of the people think that CBDC is similar to cryptocurrency. This is something that you all must understand, that vice versa is true, however, but CBDC, all CBDC is not cryptocurrency, but cryptocurrency is CBDC. We can say the latter definitely, but saying the former would be problematic and would invite us negative statement. Also, CBDC is not UPI. UPI is a payment interface. CBDC is your fiat money. UPI would be a say broker to your payment happening fully from the say consumer to the retailer, while CBDC is your notes, physical notes that you carry in your wallet, that can directly be used electronically. That is the difference between the two. CBDC is centralized, crypto is decentralized. That is why saying the former is also incorrect. And CBDC earns interest. That is a problem statement for all of you to deal with, right? Post which we have NBFC self-regulatory organization. Now, what happened recently is that RBI basically um, had put up application, I would say a notice which invited applicants to be SROs. What are SROs? SROs are basically intermediaries that conduct, say, transactions or communications. Just a second. Yes. communications with respect to NBFC and RBI, since no direct communication takes place herein, right? So, in order to facilitate this conversation, SROs exist. With respect to this invitation, there were three companies who were related with NBFCs who actually say applied for the same, out of which only one got selected because the other two did not complete their application. It was nothing that the RBI did not like their name or something of that sort. It was just the applications were not complete, and hence it was Finance Industry Development Council, which was FIDC, that was given the status of SRO. SROs are basically existing, or the objectives of SRO is basically to improve the compliance and governance in NBFC sector and reduce the regulatory burden on RBI, because most of the times it is seen that because of the say mismanagement and dysregulation in NBFCs, this particular problem arises. You'll see that a NGO, which is a non-governmental organization that regulates its own members and works under the oversight of a regulator, they basically can act as a bridge between the two, which is the RBI and NBFCs. We must understand that there must also be 10% representation of NBFCs that are from the lowest tier, because something that is static related, there are four tiers to it. The bottom tier representation which is required herein is 10%, and that is something that must be taken care of so that none of the NBFCs are underrepresented. Herein, the trap areas would be with respect to your final authority, with respect to is it a government body or not, with respect to who is the regulator, what is the confusion, and that is something you all must work up with. These are the bullet points that I have given to all of you so that you can just refer to the bullet points, and if in case there is any say confusion, you can go to Google and strictly make a Google search and have clarity then and there, so that you do not have to go about, read, research, and do all of those things that would waste your time. And hence, all of this exists in the form of a PPT, correct? Moving on to the next thing or next topic, it is our co-lending model. If we talk about the co-lending model, so RBI recently issued directions on co-lending arrangements wherein banks and NBFCs would lend while being partnered to each other, so that not one entity faces a lot of issues. And herein, each lender must retain a minimum of 10% share in the loan, and it is mostly linked to financial inclusion push and credit flow to priority sectors, because PSL is something which is priority sector lending is something that the government is precisely working upon, right? The core concept related to it is with respect to the banks and the NBFCs, and the objective is to actually have the NBFCs have the last mile reach and the banks have low cost funds all at the same time, so that things could be tackled in a better way. Now, co-lending is not outsourcing, it's not sponsorship. Be clear with respect to it. And NBFCs is not a bank, right? Here, with respect to co-lending model, both lenders share risk and returns, and often it is confused with the PSL eligibility. However, it is the call of the co-lending entities as to whatever middle ground they decide for lending out loans as such. Moving on to one state, one RRB. This is one such notion which is out there introduced to improve the efficiency and maximize the profit, so that we do not risk a lot of amount in terms of only managing branches. One state, one RRB was a model that was considered that it is well enough to actually do about the operations and transactions whatever are required via the RRBs, because it was seen that while there was no amalgamation, there was a lot of cash that was actually going out there only for the operations aspect of it, which could have been used otherwise in a better form. Therefore, it was realized that we are going to reduce the initial number was close to 196, which was reduced to I think 42 to 45. I don't remember the number exactly, and then it was reduced to 26, which was largely due to the perfect management aspect of it. And this is the fourth phase of RRB amalgamation that is to be done, which was to improve efficiency and reduce duplication. The concepts related to is of course RRB and the purpose of it, and how the amalgamations are basically done. Now, being regulated and supervised is something that you all must know with respect to RRBs, the ownership ratio as to how much the state contributes, how much the center contributes, and likewise. Moving on, we have small finance bank being the universal bank. Now, here there exists a whole sort of a process, and this particular news exists because AU recently became a universal bank from a small finance bank. Now, the entire process that one must take care of is with respect to various characteristics or various norms that particularly exist given by RBI, of course, wherein RBI can grant the in principle approval only to the banks who have more than 10 years experience, who have been listed in the stock exchange, who are having, say, foreign investments as well, and all of those things, and also the uh, 1000 CR balance along with 2 years being in profit. So there exists a lot many say guidelines with respect to which the small finance bank can be considered into being a universal bank, and AU recently got a status of it, and it largely signals that the small finance bank sector is also strengthening over the time, and evolution is from being a niche bank to a full service bank. So both the parallels are being drawn here. There are banks that are being amalgamated and actually being used as one so that they can save money, because they were using money in those aspects which were nearly not nearly to be profitable, wherein small finance banks are actually, say, giving tucker to the universal banks with respect to which they can actually be profitable also, and they are earning well enough. The core concept related to this is with respect to small finance bank, along with which you must also know about payment banks. You must also know about the payment aggregator and gateway. All of this is non-negotiable. These are new things that are in discussion every now and then, and you all must also know about it. Following which, we have priority sector lending, which mostly we have discussed, and this is in news because as of now, RBI has revised and reduced the total PSL from 75% to 60% because it was seen that whenever, say, crop failed or a particular sector failed, in that case, the whole bank actually suffered loss. And this was just not done because it was the government's guidelines or the RBI's guidelines that they were following, and even after following all of it, they were, say, facing losses, which is why it was revised so that the remaining 20%, however it is, can be used in a profitable manner, so that it does not come to the fact that we have to actually put down the shutter of the bank and like close it for that, right? Moving on to the next topic with respect to is with NPA and SARFAESI Act. SARFAESI Act given in 2002, I guess, in order to deal with the issue of non-performing assets, because previous to it, it was just the courts and the people or the agents who were responsible to recover loans, and it was a cumbersome process to which Narsimham Committee 2 actually introduced with the idea of having something that today we identify as SARFAESI Act. And this basically recovers the loan into two aspects. One is via reconstruction and the other is via recovery. In the aspect of reconstruction, ARC or the asset reconstruction companies are involved, wherein the companies actually buy NPAs from banks and try to recover it from the source. But anyway, not much ARC deals are done, since ARC do not say translate the whole amount, rather give a part to it. So the banks may or may not accept it due to the fact that the part which is offered to them, per se there is a 10 cr loan, the part is negligible. They'll say we'll give you 4 cr for the collateral that you have. Sometimes the banks take it that okay, anyway this is an NP and we're not going to make money out of it, but then at most times the loss is massive and therefore the bank refuses. So in all of those aspects, this particular act basically exists. The core concept related to it is NPA, be it of any type, gross or net, and what are the types of NPAs that basically exist herein is something that should be known. Then comes the aspect of SARFAESI Act, which is Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002, which enables the bank to recover bad loans and without court intervention, which actually facilitates the process and majorly like speeds up the entire thing. Correct. Moving on to which we have the PCA framework. Then PCA framework is in use because around 500 urban cooperative banks have shifted to this framework from April 2025 and have replaced the supervisory action framework for UCBs that existed previously. RBI strengthens early intervention mechanism in weak banks, and that's how it actually works. In terms of PCA framework, we must understand that it is a supervisory tool, not a regulatory tool. Highlight the keyword here. It is a supervisory tool that applies to the banks and BFCs, and its objective is largely to detect financial stress early and prevent the bank from that stressful asset and prevent the failure aspect, right? Moving on to which we have payment aggregator. If we talk about the payment aggregator aspect, then payment aggregator is nothing but a middleman and intermediary which actually facilitates the transaction between the consumer and retailer. That's what your payment aggregator is. Payment aggregator with respect to banks exist. Meanwhile, there are also payment aggregators that exist out of NBFCs and other entities. All of them have to actually apply to become aggregator, and they can precisely be of three kinds. The payment aggregators could entirely be online, they could be physical, or they could be cross, depending upon what nature they have actually asked RBI, like what status they have asked RBI to like grant them. In terms of cross, if I give you a very easy example, you will know Airtel Payments Bank. Payments Bank actually provide you the option to say receive money online and like show it to some entity, a ration shop or a grocery shop, and they give you the cash after taking it from you. That is a kind of cross payment aggregator that exists, wherein the payment is made online and obtained offline. Then online and physical mode are typically the pure forms of it, and that's how payment aggregator aspect exists. It also pertains to work in the e-commerce ecosystem, because digital payments is something that we are making every now and then. Payment aggregator collects payments from customers and transfers them to merchant, which is why you see that every time you make a payment there is a please wait, and there is a verification as well that exists, because it is the duty of the payment aggregator to make sure that the transaction is made at the correct place, uh, else there would be a lot of mishap with respect to it. Again, post that we have FRBM Act and CAG findings, wherein the Comptroller and Auditor General flagged that there are issues in government's compliance with the FRBM Act, and the key concerns are largely with respect to the rising GDP to debt ratio, higher interest payment burden, and all of those. And that is something that you must separately cover, wherein you must also know about how the CAG works, appointment, tenure, etc., and should also know about the FRBM Act, which is with respect to the interest payment, NPAs, etc. Again, FRBM Act in its core is a law which is to ensure fiscal discipline, macroeconomic stability, and responsible government borrowing, which is why it is essential for all of you to know about it, and the trap areas are given here. Next up, we have about deficits. This is important because deficits is something that is asked every year, and from last year we have seen that even the formulas did came in handy in our prelims examination, which is why read about it. It's a very static related topic, and I would request you all to read about it. Then comes the aspect of debt to GDP ratio, which has increased over time significantly post the pandemic, and it has concerns over fiscal sustainability and rising government borrowings, which is why we must be concerned about it, since we are also in the middle of a geopolitical mess. That is why this is something that we must take care of, because we never know how in prelims things are put up to us. The next question is with respect to Income Tax Act. Now, this is a relatively old news. However, 2 days back we did get certain new advancements with respect to this as well, wherein it was said that Form 16 now is no longer applicable and it is replaced by Form 130, and the say how do I put it, the um, amount which was reimbursed by the government in terms of claiming your say tax payments, etc., with respect to fees, education, hostel, with respect to your child have also increased. So, and even HRA. So you all can read about it if in case you're working. But yes, these are the major changes that have recently taken place, and therefore we can well expect Income Tax Act being passed as well, along with these recent changes that have just occurred. Then we have virtual digital assets taxation, wherein we talk about the taxation over cryptocurrencies, digital tokens. Government is primarily focusing on tax compliance, and this is something that is in talk since 2021-22, because in the budget session we did introduce about taxing up the cryptocurrencies, and that's how we came to the entire ambit of actually talking about taxation of the virtual digital assets as well. Here, people might ask about VDAs. With respect to science and tech, they might ask you about the blockchain aspect and all of those aspects with respect to how you can actually deal with the taxation bit and why is it important all at the same time. Then we have safe harbor rules, wherein the CBDT has expanded the scope of it and have increased the threshold and have introduced new sectors as well, wherein they would provide certainty to taxpayers and reduce litigation and transfer pricing and all of that. Herein, it is essential to know. However, it's more of a main centric say topic, but I have introduced it so that you all just read about it, because we never know that if they ask about certain compliances, certain pricing, and hence it becomes really important, because again it is confused via tax exemption, and income tax anyway is in talks right now. Then we have advanced pricing agreement, wherein due to say biases, due to mismatch aspect, we have been seeing that the taxation bit is a problem herein, due to which the government asks that you pre-declare the price so that there are no favorism, no price mismatches, because of which we can actually say tax you appropriately as a company, so that we do not face any losses, because anytime when such things or corrupt activities happen, the government is something that always is on stake with respect to their monetary benefits, because at the end of the day we must understand that the revenue that the government gets mostly is out of the taxes that are being paid, and hence it is important that there is certain sort of legitimacy in that, and in order to maintain it, advanced pricing agreement and such kind of tools exist. We see there is a growing use of APA mechanism these days, because the tax dispute is something that we are wanting to work on regularly. So that is pretty much it, and I hope that all of it made sense to you. If there are any issues, you all can ask us. We would be doing multiple such sessions. We would be doing certain explanatory sessions as well with respect to the core static topic, but that would require you staying with us for a longer duration of time, so that we can ensure that your prelims 2026 is in safer hands, so that most of the questions, even if you are beginner and you are going to attempt the examination, is tackled by us. So if you like the session, then please do the needful of liking, sharing it with your friends, because we are actually putting in a lot of efforts for all of you, and sharing, of course. And if you haven't subscribed it yet, please do subscribe to the channel as well. And that is pretty much it. I'll see you all soon, really very soon, with more expected topics for prelims with respect to different subjects as such. Do also let us know what you all want to hear from us, or what you want to read about, or say are looking forward to next. We are all set to resolve all your issues, all your problems, just so and just on time, so that you all don't face any issues with respect to the examination. Thank you so much for watching. Have a nice day.